Hey there, everybody. Andrew Mitchem here at the Forex Trading Coach. Welcome back to another week of these fantastic 8-cap trade zone sessions. Really enjoying this and awesome to get so much really good feedback from everybody. And this is session number 5 of 10. So we are doing this today live Monday the 13th of March, and then we'll be here again same time on Wednesday the 15th, and then the following week for 4 more sessions after that. If you are here for the first time, welcome along. Good to have you here. And special thanks to Eightcap for hosting these trade zone sessions. And also to let you know that the previous 4 sessions you can find on YouTube. They all go live, but they are all recorded and you can watch the recordings on YouTube. So a few things to just cover on here. We'll cover the calendar, see what's happening. We'll have a look at the 8-cap calendar. Also want to talk about last Friday. It was the non-farm payroll jobs news announcements out of the US a week later than quite often due to the shorter month of February. And so that's meant that today's been pretty quiet so far. Not a lot happened just yet, as you'd expect. And then, of course, we've had the news out of the US with a couple of banks collapsing as well. So I would expect there'll be quite some price action heading into the week when the market kicks in Europe shortly and then into the US session. I want to cover the update on some of these monthly chart trades that I've been discussing for the last few sessions. And I also want to share with you some 5 weekly chart trades that I've taken today, a daily chart from last Friday, and also update you on last week's weekly chart trades as well. As mentioned, it's quite ironic on previous sessions. I've said I'm the Forex Trading Coach. I trade predominantly Forex pairs. But over the last few weeks, some of the non-Forex pairs markets have given us some of the better trade setups. And that's kind of what we're seeing continuing right now. So it's quite interesting how that happens. Just a quick recap on the 8-cap website here on the client portal. Their fantastic economic calendar, which is all defaulted to your local time zone. You can go on here and find out and click on some of these high impact news announcements. I probably wouldn't be too concerned with some of these lower impact news announcements. I mean, you of course can see what's happening there and keep yourself like up to speed of what's happening. But it's generally the higher ones that move the market, of course. So that's there on the economic calendar on 8-cap. So let's get into, we'll start off the monthly charts, and I've just had the Euro US dollar fill. Now, as you would know from previous sessions, I am predominantly a technical trader, and I also like to use limit orders. So what that means is with a limit order, I'm getting filled at a better price than the market opened. So the market opened on the monthly chart here at the beginning of this month of March, and all that's happened on the Euro US so far is pretty much it's pulled back. But what it has done is it's now got me filled into the market at a better price. So if you'd imagine, let's say I'm going to put some lines on here and give you an idea of there's my entry level in there, and there's a stop loss I've got in around here. Let me just raise that slightly. And there's my stop loss in around here, and a profit target, let's say, is in here. So what I'm getting on this trade here is a stop loss now of about 190 pips roughly, and a profit target down here of around 540 pips. Just round numbers there, ballpark figures. And so you can see instantly the reward to risk is massive on that trade. If I entered at the market with the same stop loss and profit target, I'd have a 330 pip stop on this one, but only a 400 pip profit target. So it's only about a 1.2, 1.3 to 1 reward to risk. Whereas now, if you look at that being 190 pips and this being here about 550, top of my head, what's that, about 2.5 sort of reward to risk on that trade. So that's how you can use limit orders to get higher reward to risk. By the way, feel free to use the comments tab on here, type in questions as we go. The more interactive you make this, the more you'll learn live from the session. If you're watching the recording, then make sure that you can type in questions, and either myself or the team at 8-cap will go and answer those for you. So that's one of the trades that's just been filled today, and I've discussed that on previous sessions. Another one here just to share with you would be the US Chinese yuan, and we've covered that again on some of these previous sessions here, and that one's been filled last week, and that one hasn't really moved a great deal so far today. So there's a few trades there to keep an eye on, and as we go through these sessions, I'm going to cover with you the progress of these daily, weekly, and monthly charts, plus some of the shorter time frame charts. I had a question last week from someone who emailed me asking me to share the Aussie index. It's a trade that I took on Friday on the daily chart. So if you go up here to the indices, and then you go to the major, the ASX200, and if you go to the daily chart in this case, I took a sell trade in here based off this candle on Thursday. This is Friday's candle. And as you can see, I took a sell trade there, shown as an outside bar with a bounce off the middle Bollinger Band. I entered a limit order, which clearly did not get filled, but I also entered a market order with a slightly tighter stop loss on this trade. And this trade within the day and before the non-farm payroll news announcements hit my profit target. My profit target was just before this swing low over here. And that trade ended up making roughly about, let's call that 86 pips. And my stop loss in here was about 35 pips. So really good reward to risk. The market opened, it basically went straight down and took full profit on that trade. Looking at my notes here, we actually had just about just over a 2-to-1 reward to risk on that particular trade. So those are some historical trades that I've taken and some that are still in. For this week, I saw nothing on the daily charts today. And again, with the US non-farm payrolls, the employment data out on Friday, sometimes you'll find that on a Monday, the daily charts are not showing a lot. However, there were some good weekly charts that I'd like to just bring up on screen here now and share with you and explain why I've taken them. So the first one on the weekly is the US Mexican. Now this is a reversal trade. So being a reversal trade, it's slightly higher risk because I'm taking a buy trade here against this quite large downtrend. So what I'm looking for on here is just a short pullback. I'm not looking for a massive, price increase way up to the 20 level. What I'm looking for, first of all, is a retracement, which I've just had. It's just been filled. So I'm in on that trade. And this is a weekly chart. And all I'm looking for this now is to head back up. And so what I'm going to have on this trade, when this trade hits my profit target, and I'll just draw my fibs on here to show you exactly my profit target. So this trade's just been filled in here. I'm going to get myself out of this trade about 670 pips there, or 67, depending on which way you want to call that, in here for about 190 pip stop loss, or 19 pips. So you can see on that, that's well over a 3-to-1 reward to risk trade on there. So we'll keep an eye on this trade. And when we go into Wednesday's session, I'll be able to share with you the progress on this trade. So what I'm looking for, the reason why I'm taking a buy trade here, is this candle which closed in here. And this is the weekly chart, don't forget, but it doesn't really matter the time frame in terms of the technical setup. What I'm looking on last week's setup here is it's formed a new swing low. So this swing has come all the way down here. It's formed a new swing low, and then it's rejected that and it's pushed all the way back up. Also from this swing high in here, if you take a trend line break or a trend line down through here, you can see that quite clearly I have a break of that trend line. I have the candle closing high. It's closed above the previous candle's high. The stochastics are very low, oversold, and started to rise. And so that's my the logic behind why I've taken a buy trade there. So right now, that's obviously just a few hours into the market, and it's the US Mexican. So obviously nothing's really happened at this time of the day on the US Mexican in terms of both markets are not open yet in terms of their active trading sessions. But that's what I'm looking at this trade here on that reversal. So this is a buy trade. The next trade is the Canadian yen, and I think this is a very, very nice setup. Let's bring this one up on screen for you. in here. Oh, there it is there. So this is the Canadian yen. So this trade here, I'm now taking a sell trade. This to me is a safer trade and a better trade than the previous US Mexican. The reason I'm saying that is because it's a continuation pattern. And to me, a continuation pattern is always a better, safer, higher probability trade than a reversal. Reversals look really cool on your charts. You know, you've got a massive downtrend and you're taking a buy and it heads back up in your direction. That's really cool when it works, but a continuation is far safer. So what are we looking at on here? So again, weekly charts. Large downtrend, first thing we want, and then we look for a pullback. So this pullback has come to the middle Bollinger Band, because if you look on here, there's the upper, there's the middle, there's the lower. Now the middle Bollinger Band is also the same as the 20-period moving average. I don't particularly use moving averages and crossing over and that type of thing, but you know, you do have to acknowledge that the middle Bollinger Band is the 20-period moving average. So on here, what do we see? We see the pullback. Fantastic. Now it's stalling. How do we know it's stalling? It's formed a pin bar. In other words, the price has come all the way up here and then it's dropped. Anything else there that I see? Well, if I look at this high here, I can see there's some previous highs back to the left, back at the end of last year. And when I look back over to here, I can see this swing low as well, all within this kind of range. So it's pulled back to that level. Then I always look at the price, because to me, the price is something that too many people fail to observe. And if I hover my mouse over this level right about there, you will see that's at the 100 level. So that's a very strong, obvious level. So what we've seen is the price come all the way down through, it's pulled back, it's rejected that, it's gone above the 100, and then it's come all the way down and it's closed below the 100 level. Massive psychological level. We also have what I call the N shape here. I'm looking for, like, if you imagine a small letter N. And as we mentioned on the previous trade, trendline breaks are also nice. So you take your low from here and you look at these lows getting higher. So from this low up through here, you notice there's a perfect trendline break. And this candle, the setup candle from last week's completed candle, that has closed very strongly through this trend line. So that to me is giving this trade even more credibility. Added on top of that, my stochastics are very high and have turned downwards from overbought. And to add even more on top of that, last week on this closed pin bar from the previous week, we have on here a hidden negative divergence signal. So what this is showing us is that the highs in the stochastics have got higher. So you look at this peak and you look at this peak. Now my software draws this on here for us, so I don't even need to really look at it. It identifies my eye to the hidden negative divergence. So the highs have got higher in the stochastics, and at the exact same time, we then look at the highs in the price. And again, it's drawn, plotted on here for me. But I can clearly see the highs in the stochastics have got lower as the highs in, the highs in the price have got lower as the highs in the stochastics have got higher. And so there becomes our divergence. This is hidden negative divergence. This is a perfect continuation pattern. And so on this trade today, I've taken a limit order and I have also placed a market order, but my market order stop loss is at a different place. My limit order stop loss is just above the 99 level. My profit target is down here around 95.40. I also have a market order in with a stop loss at about 98.45 in here. So I've got two positions in. Market order obviously is straight in, but that has a tighter stop loss to give me the reward to risk. The limit order has not yet got filled, but because it's a weekly chart, I'm giving it one candle or 1 week to get filled. Now, the only time I will delete this limit order up here is if the market order takes off and the price comes all the way down and it's clear that it's not going to retrace and it's already at my profit target or close to my profit target. If that happens, I don't get filled on the limit order. But however, my market order is probably going to make me money. So, and that's the name of the game of what we're doing. So that's a really high quality continuation pattern there. So that's the second weekly chart trade. The next one, now this does have a gap. So when I saw the setup to start with earlier today, my time, I was analyzing the market before it opened, and obviously the market hadn't opened when I'm doing that. And so I didn't see a gap at the very beginning. Now, it's a bit of a shame there's a gap because this is quite a nice trade also. Now, because of this, I've not taken the trade, but I wanted to share with you my thought process. If you ignore this green candle when the market opened, because what happened is the price gapped all the way down here about 95 pips, which is way too big a gap. You cannot trade with an opening gap like that. And then it's pulled back. But ignoring this green candle, when I was making my analysis on this setup before the market opened, what I was looking for was a big, large uptrend here, pull back, market heads up again, and now I'm looking for it to retrace back down. It's a downtrend, pull back, continuation down. Notice again, this is at the middle Bollinger Band area. So this is on the Singapore Japanese yen. Clearly not a very, highly traded pair, but still the pattern shows. We still have the trend line break. We still have the N shape. We still have the prior indecision. We still have the close below the middle Bollinger Band. And we still have in here, even on this pair, the break of 100, stochastics high and falling. So unfortunately, this trade became invalid when the market opened because of the gap, but I just wanted to share that one with you. And the next trade that I've taken is again on the weekly. That is in here on the Mexican yen. And again, the pattern is what we're trading. This also had a bit of a gap up, not as significant as the Singapore yen. But what I like with this trade here is we've got quite a strong resistance area. We've got 3 candles all at highs here, another high here. This from last week went and formed a new high. Notice it's higher than all these highs over here. And if we take this chart way back, we can't go back any further than about a year ago on this particular chart, but you can see it's reached a new high on the Mexican yen. It's closed strongly, kind of a trend line break, not perfect, but we do get the N shape. And again, this trade here, because of the gap, I haven't taken it. But if it were not for the gap here, I'd be looking for a retracement order first and then looking for it to fall. So that's how I ensure I get my high reward to risk out of my trades. The last trade that I've taken on the weekly charts, this is on one of the indices. This is the French 40. It's called France 40 Cash or FRA40. And what I love with this setup here is all this resistance. 1, 2, 3, 4 weeks in a row, all stalling at around the 7,400 level, as you can see on the right-hand side of my chart. So lots and lots of resistance there. Now, does anybody see anything else about this trade? Type in, let me know in the comments area, anything else that you can see on here of why this could be a good reversal trade. Now, bear in mind that this market has not yet opened for this week. And if there is any significant gap, it makes the trade invalid. But when the market opens, assuming that there's no gap on here, then I'll be taking this as a sell trade with a limit order in there as well. And as we go through later in the week on Wednesday, I can share that trade's progress with you. But what I'm also liking here is not only the quadruple top at the round number, is if you look all the way back here across on the left-hand side. Now this is back into, this is the beginning of 2022. Note how that high is at exactly the same high and same price as these series of highs here. So basically for the last month, the price has tried again. These are weekly charts, of course, but 4 of them makes a month. So for the last month, the price has tried but failed to break that 7,400 level. And now it's turned around. Now it's dropping. Up through here, we have a trend line break. Up through there, it's a clear trend line break. It closed strongly off the upper Bollinger Band area. This is a reversal trade. It's a reversal of this large uptrend, but it's a reversal with the candle pattern, reversal with resistance, reversal in the right part of the chart, reversal at a round number, and back here, more resistance. Also, there has room to move to my profit target. I'm not needing to break down through the middle Bollinger Band or to head further down here for my profit target. All I'm seeing on here is a really good quality reversal trade. Stochastics have been falling as well. So everything there to me is lining up for a really nice trade. As mentioned, assuming that we don't get any wild opening gap when this particular market opens today. So those are my weekly charts and monthly updates. We covered the Aussie 200 from Friday's daily chart. I've also had a request to, actually, I'll share the 12-hour one right now. I had a request to look at something shorter, and this is the JPN. And again, the Forex trading coach trading non-Forex markets, because this is what's setting up here. I had a screenshot here to share with you of this particular trade from my forum site, and I'll see if I can just find it here for you, because I took a sell trade here on the live webinar that I hold with my clients, and here's the result of the trade. So I'll just show you the result on here. So there's my the two trades I took down here. I placed this trade live on a live webinar with clients, and you can see my two entry levels, my stop loss levels. My profit target is the same. My stop losses are different, and the trade hit full profit there in very little time, but they were taken live on the webinar. So that's what the candle looked like after the profit target was hit. This is the candle in here, and it was a beautiful reversal trade. So what we had here was a very large uptrend. We had this new swing high. We had the N shape again that we've talked about. We had a kind of a trend line break. It wasn't perfect, but the stochastics were high and falling, and there was lots of room to move for our profit target. What I mean by that is I like to see no obvious, in this case, support in the way of the trade, no swing lows, no round numbers, don't need to break the middle Bollinger Band. So this, you can see everything's wide apart here. There's lots of price action in the market. It gives me lots of potential and probability that the price will then fall and hit my profit target, which it did really nicely. So that's a shorter time frame chart. So you can see on here that it doesn't really matter what the time frame is, whether you trade like 1 hour, 2 hour, 4 hour, 6, 12 dailies, monthlies, it doesn't matter. It's the setup that we're looking for. And the setup is what gives us the pattern and the high probability trades, but with high reward to risk. So all of these trades, doesn't matter whether it's a 12-hour chart here or a monthly chart or a 2-hour chart. For me personally, all my trades have equal and known risk. They all have low risk, and I know what that risk is. It doesn't matter what the market, what the time frame, what the direction is, what the stop loss size is. Because a lot of people look at these trades and go, I can't trade these with monthly charts because the stop loss needs to be too big. It's like, no, the stop loss needs to be where the stop loss needs to be for the particular trade. But all you're doing is you're using a lot size calculator and Eightcap have one on their site. And all it means is you're reducing your lot size that you place on the trade. Don't just place the same lot size on every single trade. It's not a great thing to do. We'll just show you last week's weekly chart trades. So if you have a look at last week's session, you would have seen me place these trades. Hong Kong 50. Sorry, these are daily chart trades. We talked about these on Wednesday. I'm sorry, on the daily charts. This was one I took on. So if you go back and watch the last session from Wednesday the 8th, you would have seen I've taken this as a sell trade. So I'm not going to cover the actual trade. I just wanted to share with you. Profit target was hit on that trade. The US 30 was another in here. And again, go and watch the session from last week to hear the reasons. And you'll hear me talk about lifting the profit target on this one to allow for that swing low and the swing low. You can clearly see here, profit target was hit on that particular trade. The NASDAQ in here, this trade was stopped out, unfortunately, although on Friday the profit target was hit. It's just that it pulled back too far here. First of all, on Friday, stopped me out. Bit of a shame, because otherwise the trade would have hit full profit. But you get stop losses and they get hit, and that's what they're there for. But everything else was profitable. The S&P 500 in here, again, watch Wednesday's video. Full profit target was hit on there. So although there was one trade that got stopped out on this NASDAQ here, it's still, I got stopped out. I lost money on it. But the analysis was still there. It's just my stop loss got hit first. So you take a loss and you go, okay, I've taken a loss. But this trader here on the Hang Seng 50, I've hit profit. The S&P 500, I hit profit. And the US 30, I hit profit. So 3 out of 4 trades hit the profit target. You take a small loss on your losing trades, because everybody has losses, but you make sure they're low and controlled. And therefore, if you have high reward to risk, you're making 2, 3, 4 times your risk on profitable trades. And to me, that money management aspect is one of the most undervalued, possibly because it's a boring topic for so many people, but it's one of the most critical parts of trading to get right, of course, along with your strategy. So look, I hope that helps. Thank you for being here, and I hope you've enjoyed watching the session if you're watching the recording. Don't forget to come back here on Wednesday, the 15th. In 2 days' time, we'll be back here to update the progress of these trades that I've talked about today. Any questions come through on the recording on YouTube. Any questions, you feel free to either contact Eightcap as well, or myself directly, and we'll cover any trades for you on Wednesday. So look forward to seeing you then. This is Andrew Mitchem at the Forex Trading Coach, and with Eightcap, I'll see you Wednesday.